Hello, I'm Washboardjim with a Sneaky Snake trading strategy where I talk about chart patterns, moving averages, and being in the now. And I want to go through a series of videos about moving averages, about where I like to catch plays at. And we're going to talk about the 63 today and maybe a chart pattern that was kind of semi-recognized, maybe a couple. But today was definitely an unusual day. We kind of just went sideways with higher lows and higher highs, and I want to kind of talk about the trade that I did on the SPX and how patient I was today. I missed out on 3 or 4 trades during a little period there where it would have been in and out of a trade within 3 to 5 minutes, and I'm going to point them out. So let's go ahead and talk about it. This is a Sneaky Snake trading strategy where I talk about chart patterns, moving averages, and being in the now. So this is the SPX. You can see we had just kind of a real no volatility today at all. None. Nothing. I mean, none. I was waiting for that big dip because we just kept going sideways. And I got to noticing after a bit that we were having higher lows and higher highs. And there was a little chart pattern at the beginning of the day that kind of set the trend for the rest of the day to find support. Now these are my moving averages. I did a previous video about my moving averages. I've got the 200 SMA, the 200 EMA, the 63 EMA, the 50 SMA, the 21 EMA, and the 9. And the 9 and the 50 and the 63 came in very handy along with the 200 today. So I'm sitting here first thing in the morning calling out trades. Whoop. And we had us a little bitty triple bottom inverse head and shoulders. It's not really much. This is on the 1 minute time frame, but I use the bodies of the candle. So I'm going to put a trend line. Right, using that body right there. And I'm going to run it up to this next body. And that's going to be there all day long here. We're going to show you how respected this trend line was. Well, you got your left shoulder and you've got your head just a little bit down, and you got your right shoulder right there. So I called a double bottom out, and we started forming a little flag here, a little symmetrical flag. You can see it kind of coming down. Lower highs, lower high. Then bounced up a little bit, and it came back and touched that right shoulder again. So you got left shoulder, little bitty head, little midget head, right shoulder, and right shoulder. And then it went ahead and broke on out. And that there alone was worth about a couple $100, $150 a contract. And they kept respecting the 9. As you can see, it's running up against the 9. And then we had another pullback, and it came back to this right shoulder. You got your left shoulder, your right shoulder, your right shoulder, and your head. And we came and respected that same trend line right here. Well, this kind of created a little triple bottom right here. Or let me see if that's farther on down. Yeah, that's farther on down. So we had another little bitty one where it touched here a couple times as it pulled back for another trade, a little triple bottom off that trend line, respecting that 63 EMA. That's your 63 EMA right there. And I was in another room with a guy that calls out the 63 EMA, and I don't know too many traders that use it. I really don't. I don't know too many traders that use moving averages. But I do when I want to buy at support and I want to sell at resistance. Like these right here were little $30 scalps using the SPX, and you run it up, get out at the 21, get out at the 50 SMA, wherever you kind of think, you know. And we had this little triple bottom again, and it bounced up pretty good. Then it came back. Everything likes to retest once a breakout. Came back again, respected the 63 EMA and that trend line. Then we had another breakout. And then it came back and respected the 50 SMA and the 63 again. And this happened all day long. So I was getting kind of bored and stuff. You know, I'd go and cook me a meal or play a tune or talk about stuff. Just kind of keep the room busy. But you could see this sideways pattern just going all the way down, all the way down. So here we had the triple bottom and it ran on up and it came back down and respected that 63 and that 50 SMA again. And then I called this trade out. I called a put. We had kind of like a resistance wall that was kept forming up here on top. And for just some reason, I figured it was time. It was that time of day. It was right around 12 o'clock here in Missouri. 1 o'clock Eastern time when things start to sell off. People are going out and going to lunch. And the thing started pulling back here, and I got into a put, and I sold the put, and it went on down a little bit farther. And it was a pretty good little put. Made $160 a contract on it. And then we started another reversal. Well, we created another head and shoulders right here. And I called this trade out, and I got into the trade. And run it back on up. Now I'm making a killing today. I think I'm on trade number 4. Usually I'd take a lot more than that. And then we got in, once I got out of that trade, it kept pulling back to the 63 again. 63, the 63, the 63, and the 50. Holding the 50 right here, the 63. And this went on for, from 12:41 all the way up to about 2:21. So good 1 hour and 3/4 minute, one and 3/4 hours, where it just kept going in that sideways direction. And I missed out on all these trades in here. And finally we had another dip to the 63. And after a while it starts to get kind of old and it loses momentum. But today was not that kind of day. Today was just constantly bullish. And I called this trade out and jumped into it. So it ran up and I sold it at $1,000. I got in it, made 100 and some percent on this trade. Got out and then it ended up going up to $1,800 by the end of the day. But it was one of them kind of days where the market just kept going sideways, but it always kept, and we came back and we hit that 200 SMA right here. That's why I took that trade off that 200 SMA. 200 SMA. And that's one of my favorite moving averages to jump into a trade on. And it ran up and went sideways. I sold it, held a couple contracts, and ended up selling for $1,000. So I guess the end of the story is every day's a different kind of day. I kept waiting for that big knife because we've had so much volatility in the market. I figured people would just let go and let the thing fall, but it never did happen. We kept getting higher lows, and when I did get the opportunity to jump in the trade, again, I took my chance because I called out every one of these trades, but I never took them. And I'm talking about a contract going up $100. I said, man, these things are up $80 already in 3 minutes. And I said, I wish I would have took that trade. All of these little bitty candles, it was kind of a strange day. Wasn't that much volatility in the candles at all. Those candles were babies. Each candle is 1 minute. Usually they're a little bit bigger than that. And we've had such a volatile couple weeks that I was expecting a pretty good little dip and jump in some cheaper contracts. But I just wanted to bring the point out about the 63 EMA and the 50, how they kind of snuggled together. And I got to talking in the room, and I said, I want to start watching these moving averages and see how they see how they move. Like here you've got the 50 SMA above the 63, and we had a little dip right here where it kind of crossed over the 63 again and kept going up, but it was going down here for a little bit. I want to see if there's any kind of correlation to these moving averages when they cross each other, like the golden cross with the 50 SMA and the 200 SMA, or the death cross where it kind of pulls back. So, yeah, I think that's basically how I wanted to point out this trade today. It was the 63 and 50 SMA with 2 inverse head and shoulders and the 200 SMA, and that was about it. And how you can make some good money on just little 2-3 minute scalps. If you got that kind of money in your account, spend about less than $1,000 and buy about 4 or 5 of them, run it up, sell them for $60-$80 a piece. And right here, I counted up, I could have made about $1,200 if I'd have took all 4 of those trades. So this is the Sneaky Snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. And I'm going to go on a little theme here with moving averages on my videos when I kind of talk about the trade of the day or how the market went, on ways you can recognize a good chart pattern or a stubborn. For example, let me bring this back. One thing I like to point out to people is let's go to the whole day here. I'll watch these moving averages, and I'll see which one of these candles respect what moving average. And this example it was respecting the 63 most of the day on the 1 minute. So when I'm sitting up here later in the day, I'm saying, well, I know in the past that we've hit that 63 how many times today already? 1, 2, 3, almost 4, 5, 6, 7, 8, 9 times in a matter of an hour and a half. So when we dipped down below it, we started respecting that 63 again. So that gave me kind of the idea that we're holding support off that 63 most of the day. And that could be true with the 50 SMA. It could be true with the 200. Comes down and hits the 200 SMA or the 200 EMA, or just how it respects the 9 to keep you in the trade. See how we respected the 9 here? As long as we didn't go below that 9, I'm still in this trade. And then until it got to the end of the day. But once it broke down below that 9, I want to hurry and sell my contracts and try to get out of them at the market, or just get the heck out of there so I can take my profit. So that's part of using the moving average. Look to see what candlesticks are respecting what moving average, and then use that as a catalyst to take trades throughout the day. So again, this is the Sneaky Snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. And see you tomorrow.